Welcome to another episode of the Dealmakers Chronicles with the Hasanov Brothers. I am Farouk and I have my partner and co-host Farkad with me. Today we have special guests, King's Capital. We've done a lot of work with them. They're dear friends of ours. They've been doing absolutely extremely well in the world of multifamily in New York City. Welcome to the show, gentlemen.
Thank you for having us. I appreciate the opportunity. It's great to see you guys, and we miss you up here.
Thanks for having us, guys.
Well, thank you for coming on, George and Jeff, two of the principals. And to be honest with you, we don't miss New York's weather, but we do miss our dear friends and everybody up in New York. And let's just, jump right into it. Tell us how you guys met in the first place, because you guys have actually a very unique story about how this partnership came about. Tell us about the beginning of how you guys met, the beginning of King's Capital.
I'll let Jeff say that story. He likes it. He likes to share that story.
Yeah, I mean, it's just funny how work and real estate and business is all built on networking. And George and I, although we happen to be living and grown up from each other, about a couple miles from each other, we met about 1,000 miles across the country in Vegas for the real estate show at ICSC. And it just shows the power of networking, where we happened to network at a real estate show 11, 12 years ago, and now 10, 12 years later, we're partners operating, have a huge portfolio, and just funny how we met in Vegas, became friends, and then I guess through activities within the industry ended up becoming partners.
So at these events, you meet 1,000 professionals. You shake 1,000 people's hands. Did anything stand out to you about George? But did you just want to get to know him on the personal level? You said to yourself, you know what? Why not work together? Because rarely do I see a partnership come from an event like that. Sure, people run deals by each other, absolutely. But for two people to get together and actually open a firm and be very good at it, you don't see that much. So were there any early indicators between the two of you that said, okay, this is my partner?
Yeah, I remember very clearly the day I met him. He was wearing a very deep blue, a little bit lighter side blue suit. So since that day, I said, this guy's a great dresser. I'm going to follow him around. No, I'm teasing. But I do remember the blue suit. I think what really stood out that created this partnership was twofold. The first is follow up, which is important in any networking events. You just mentioned meeting 1,000 people, but what's good meeting 1,000 people if you don't follow up? And I think what George did well was following up with me, or he was just trying to connect with me or see what I was working on. And the second part is being relevant. We didn't become partners or instantly friends that year when we met in 2014, but seeing him at other events and with other operators and other people and continuously having a point of reference and relevance, I think that's where some of the comfort and the relationship got built on.
Understood. So basically, the constant seeing each other at events, like they say, 7 to 8 touches is to get somebody's attention. For you guys, it was seeing each other at events, building that rapport, building that trust factor that you guys are real people and both individually are succeeding in what you're doing. What was it like to get on that first deal? What was the icebreaker? Tell me how you guys got into that first deal together where you put both your names on that dotted line and said, okay, let's do this together, let's learn from it, and let's see how it goes. How did that come about?
I know George likes saying this story, so I'm going to have him.
Yeah, well, I mean, we did our first deal before King's Capital was in existence. We were four partners in 2015. At the time, it was just Jeff and Richard who had sold some smaller assets, and I was with Jeff. We were speaking throughout, like as you mentioned, during the year. And I was calling him for opportunities. I said, hey, I shaved a couple of dollars. I'm looking to buy a building. Can you show me stuff? And he was working on some off-market deals, and he was very hesitant to show me things, which was funny, looking back. And they had sold two of their smaller assets. They were 1031ing into two six families in the Bed-Stuy Ocean Hill area. And at the time, I remember we were in Greece actually that summer, and I hadn't even seen the properties. And Jeff and I were talking. He's like, we're looking for someone to come in and fill this equity stack that we have left. And what do you think? And we sat there. And at the time, we weren't underwriters. We just looked at a spreadsheet. We kind of like go back of the envelope. I looked at where the properties were on the map. And at the time, Bed-Stuy and Bushwick were just on fire in terms of just rent growth and just people coming in buying all these brownstones for crazy numbers. And there was this little pocket in between that I saw, okay, you can still get good basis here. And I ended up agreeing to buy these properties or jump in with them at the time. And, fast forward, 4 or 5 years later, we bought 8 of these properties in Bed-Stuy and sold some and still have a lot of these legacy assets today. And, during COVID is where we decided really to, take this sort of to the next level and form King's Capital and, go out and make this a real business.
What were some of the initial challenges on that first deal? Just putting it together. Like you mentioned, Jeff was reluctant showing you deals, but then, you guys ended up buying those two six-family properties in Bed-Stuy, Ocean Hill. What were some of the initial challenges of learning how to work with each other? Or were you guys on the same page when you were looking at properties and it was a seamless transition and working together?
Well, you just skipped over a little bit of an important part. We met in 14, but in 15, we were in Greece together. So we ended up becoming friends very quickly throughout, I guess, seeing each other and having more rapport. And then call it 14 months later, we were on a beach in Mykonos together with you fine gentlemen as well,
Yes, I remember
which I
that.
won't forget. So
That
it's
was
just funny
before your
how,
first deal. I didn't know that.
what, I'm sorry?
That was before your first deal? As like all
No,
being in Mykonos?
A month before, literally 1 month before.
1 month before, and then a month later, I called him up after being friendly. And again, we weren't doing business together. And I said, I have this opportunity. We have a little bit of a shortfall we need to cover. And he ended up coming in. His only contingency to me was just like any good brother, and you guys can respect that as you are brothers, is that if I'm going to do this, I want to bring on my brother, which he did, Thomas, who's our fourth partner. And since there, it's kind of like the evolution of King's Capital, where we had different divisions and different roles and different functions, and went from one property and two to four to seven, and now we have about 24 properties we manage and own and operate. And we're just getting started.
Farkad, you asked an interesting question. You asked about what how it was, and it's funny at the time when we bought these properties, we didn't know what we were doing in our first. We just bought these buildings sort of blind, and it's like you can research all you want, you can read all you want until you get your hands dirty in the first deal. Like you're gonna learn so much, and none of us were operators, right? So we kind of like just learned on the fly, just figuring out where to buy your materials from, to hiring the GC and what you need permits and all these things. And it's night and day to what we do today, obviously. And we just had to learn on the fly. And what the funny thing is, on these first deals, Jeff, he had brought me in as an LP. That was the funny thing. And I said, I don't know how that's going to be. And then me and my brother ended up running the projects indirectly. We ended up becoming the on-site construction guys, helping with the layouts and the design and whatnot. And that kind of like became our thing. My brother still managed the construction management. We'd work on the design together and the layouts, and that's still like how we operate today. So it was kind of natural progression, and kind of just our roles kind of came together just through sort of learning on the fly.
Yeah, absolutely. We definitely, throughout the years of working together and being friends, we see that evolution and how almost everybody in your company fell into their comfortable roles where they can exceed and bring the most to the company. Having said that, right? So now King's Capital has made a name for itself in New York City multifamily. And correct me if I'm wrong, the purchase of 140 Mulberry was the building in Manhattan in Little Italy that kind of, jump started King's Capital's name and the opportunities. How has that evolved from your initial stages of buying six-family properties in Ocean Hill, Bedford, to buying your first property in Manhattan and now working on deals with the excess over 100 units?
Well, I think that, they kind of put a name for ourselves. Manhattan is, if you're looking on the map, it's a small island, right? And any kid growing up in the real estate business has a dream of owning a piece of Manhattan, and it was a dream come true for us. And I think it definitely put us on the map. We were relevant on these small properties in Brooklyn, but never, at the time, $5.5 million purchase during the time of COVID, when there were, mass exit of 20, 30,000 vacant apartments, and underwriting. And you guys remember we were discussing this, underwriting rents here was so challenging. There was no indication of when the city was coming back. So we took we had conviction in New York. We believed that New York would come back. It's a very unique place. Uh, Love it or hate it, it's a place that a lot of people want to be in. There's a demand to live and work here, and it really gave us a trajectory as real players in the space. Because if you own in Manhattan, there's you have a name for yourself, one way or another. And from there, we signed 2 other deals in Manhattan that year, and it really set us up for where we are, where King's Capital is today.
So with something like the purchase of 140 Mulberry, that's something that either can jumpstart your career and push in a different stratosphere, or it's something that can pretty much end your career, right? And I'm sure as you're raising the equity for the deal, as you're underwriting, there's this, like you said, this unforeseen risk. Are people gonna come back? That's something you can't underwrite. This X factor, it's almost intuition. It comes from the gut. What kind of conversations are you guys having in the office? Who's pushing it? Who's being more hesitant? Are you both on the same page in saying, okay, this is what we must do. We are for sure going to succeed at this. Or is it, okay, I think this is what we need to do, but we're not really sure where it's going to go. Like, what's your thought process as the world is coming to an end during COVID and you're looking at this property that will take you to the next level in your career?
I think there's a balance. In that specific instance, I remember it was July 3rd. I happened to be working. There was nothing going on that time. It was you couldn't see your friends and your family, and I was like, what else am I going to do? I would just go to work, and I feel like God blesses people that put the right energy into the world. And I got a call on this property, and I remember calling Jeff up, and I said, I have this opportunity. It's a vacant building on Mulberry. What do you think it's worth? It's around 10,000 feet. He says, probably around 700 a foot. I said, well, I think I can get it for 550. He's like, we need to go see it. So, basis is a lot of what we live on today. We look at that as an indicator of, if a deal may work or not, because in our philosophy, you make money on the buy, not on the sell. So regardless of how market turns, if you bought something well, you're safe. You're in the money, so to speak. In terms of opportunities today, I think where it's always a risk management, and you do your best to underwrite properly. At the end, like you're saying, it's a gut, because you can't look at a spreadsheet and then figure out this spreadsheets never go as planned, and you have to have some sort of belief in your heart that what's going to pan out, and you make certain assumptions based on that. And at the end of the day, like you either feel comfortable or you don't. Like you said, it's a gut instinct. Some of the best deals we've done are maybe the ones we didn't do, because we've looking back on them, and I see them today. But everything we've done, we underwrite conservatively. So, from downtime to rents to sales to the interest rates and how we capitalize, I think we allocate enough cushion where, we can take on that risk.
Interesting. So, your perspective on risk is very unique, right? So one is you guys look at everything conservatively, whether it's the basis that you come in or the rents that you expect to achieve or the sellout that you achieve. Is there a point that you see your company growing where you're going to take that big swing, right? It's more riskier than you usually feel like going into a property, but that gut that you referred to says, contrary to what you're seeing on that spreadsheet, you want to swing for the fences and go after that property. Have you done that? Is there a property that you swung for the fences and it came out great, or is it something that you guys are looking to do in the future?
So, Jeff, you want to jump in on this, but I think right now, hopefully we're about to sign the deal today on a brownstone in prime area of Brooklyn. I'll share with you guys after the call. It's a condo conversion that we're looking to do in a prime area, and it's coming with the tenant. We happen to feel comfortable with the situation, so we're taking on essentially with one rent stabilized tenant and going up the mindset that we're going to figure out an angle to make this property a success, and just still working on underwriting. We have another contract on a property downtown that, upon exit, it could be a real sort of institutional sort of sale. And, there are certain levels I think institutional players can play at. And I think that you can get a crazy exit when it comes to institutional if you time it right. And I think we're entering a place where I think return levels can come down a little bit as you scale up in price. Like an 18 IRR on a $5 million deal is very different. 18 IRR on a $50 million deal. There's a lot of money that can go around on $50 million deals. I think as we scale up, I think we can swing the bat a little harder, if that makes sense.
Yeah, that definitely makes sense. You guys build a strong foundation where you guys can take on bigger projects, and then you can, swing at bigger ones.
George, and you mentioned that you're growing, you're looking at these deals, and I think for the last 10 years, all you guys been doing is pretty much chasing the next deal, the bigger one. Was there a point in time where you stopped for a minute in the present and said, I'm proud of myself, or we're proud of what we have accomplished here? Did that ever happen during your 10-year run doing this?
Yeah, you definitely have moments of that. I guess it's hard. I think like the three of us, and Jeff can probably relate this, we put a lot of pressure on ourselves to succeed, and we identify by how well we do it, and all that fun stuff. And there are definitely moments, I think, and looking back on it, I think I need more of that. More of that self-love and that talk, and just giving yourself credit. But definitely feel good about what we've come. When I could actually slow down and look on it, and look at not just what we've done so far, but what we're building. I almost could see what's coming, and And that's not just on the deals, like, the amount of people we have around us. I don't judge my success just by the deals we've closed, but what's going on around us. And it comes from the guys in the office to my partners. I just feel like we're in a great place. And I'm very proud of the intangibles, say, so to speak, more so than the deals. The deals come and go. I don't think a good deal will define me, but more about the circle we created around us and what people are building towards.
That's a great way to look at things, right? So not even looking at the deals, but what you're building around you, right? Your team, your company, your culture. Jeff, is that how you feel as well? Or is it something for you where it's different, where a specific property or specific deal makes you more happy as opposed to, the culture that you're building at Kings?
I mean, we're in the business for money, and it's definitely great. But, George mentioned something, I don't know, some odd years ago, and I'm going to humble ourselves a little bit, where when we were starting out as brokers and as just owners buying $1 million properties, there was people that I want to say, looked up to or revered in the industry, whether it be larger brokers like the Bob Knackles of the world, or whether it be other operators that we tried to broker deals before we really jumped into the operation side full time. And now we look at them as a constituents, our associates, our friends, our competition. People are calling us for our business. So I think, it's also a shift in mindset, not just in how we've measured success, and whether it's on a monetary level or an intangible level, but also on a gratitude level that we're at a great point. Like George said, what we created around us and the type of image we want to have perceived. Deals come and go, but our name and hopefully our company will be here for a long time. And that's kind of what we're trying to distill: deals we do, but also the relationships and the dealings we make. And we've done a lot with F2H as well, and we have a lot more going on this year. And we're excited.
I will share one quick thing that just I know a lot of people don't know, and I think it's just a good segue because we talked about Mulberry. One of my proudest moments was the day we closed Mulberry. And what a lot of people don't know, it was our first Manhattan property. What a lot of people don't know about me personally is that when my grandparents migrated from Greece, my grandfather used to sell hot dogs, and his push cart was on Mulberry Street. My first job out of college, I was working with my dad and in the flower shop, and I would go up and down Mulberry Street trying to convince these restaurants to buy weekly flowers from us. And I still have my binder with those business cards today as just like a humble reminder. So the day we closed Mulberry, to own a piece of that street, it was just like my life came full circle from my grandfather to my dad to me. And it was just like, that was a very humbling sort of a day for us. April 14th, 2021. Never going to forget it.
I remember you telling me the story and you got very emotional too. And you talk about full circle. You guys are immigrants, we're immigrants. And, whether it's your grandparents who, came to this country first, or parents coming full circle from running a hot dog cart to owning a building in Little Italy on that same street. For you, this building being that emotional, is it something that you're looking to keep, sell, or how do you go about this specific building? Because I've asked you this question before off cameras, right? And I want to see where your head is at, because it's for you is such an emotional building. It's a full circle of your whole family's story, right? From where you guys started to where you are now. Is that Mulberry building always going to be special for you? Is that the most special deal for you that you've done?
Definitely the most special, but in business you can't be emotional. You have to separate the two. In theory, would I like to own it forever and look at it and yes, that would be a dream, but in reality, we're in the business, and you'd be foolish not to entertain what's best for the deal and best for the investor. So our ears are always open to the market and seeing what's happening. Would I love to recap it and own 3% of the deal for the rest of my life just to say, yeah, absolutely. But regardless of if I own it for another year or 5, the history is not going to change. It was our first deal, and looking back, the deal's still what it is. We still own a piece of the block, and life came full circle. Whether we keep going, life moves on, and it's the universe will tell. Like, if it's meant for us to sell it, we're gonna get a real number where I can make everybody very happy. So so we're definitely open to it.
Yeah, it definitely seems like 140 Mulberry was a special deal for you. For you, Jeff, do you have a specific deal that's a special deal that you get some kind of sentimental value, or are you more of a whatever deal gives me the highest return is the one I like the most?
For a long time, I've been wanting to own a corner piece of property, because I just, it's a corner piece, it's profitability. And When 148 Clinton came around, I want to say that was a little special to me. I don't know if it was the most special. It's hard to measure it. The most special to me is the first building I purchased, in 2011, just because it was the first building that I was able to actually create something that was my own and that I was in charge of at a young age of, I think, 22. But I would say 148, 150 Clinton was something that's up there. And I would say because of two reasons. It was a prominent corner. So owning a corner, when you own real estate, there's sometimes prominent visibility and things of that sort. And it came with a very large frontage and it was a good corner in prime Brooklyn. And I looked at myself and said, all right, this is a real asset. If we figure this out, we're opening up the floodgates to more opportunities and more interesting deals. And we were able to win the deal because of our relationship. It wasn't necessarily because of every last dollar. We were able to add value on unprojected or not projected through the underwriting, which, like George said, sometimes things are a little bit different when you deal with a building than just spreadsheets. There's a lot more that goes on within the actual property. This building was a 70% vacant building with a handful of tenants in there. We were able to vacate those tenants when they were unanticipated. We were able to create something pretty special. It was one of the largest assets purchased at the time. I think it was about 10 million and change. We did quite well. We still own it. And I think for a prominent corner in Brooklyn Heights, yeah, and I keep saying a corner because it's something that I always wanted to own. It's just something very special. And we've done something really nice there. I think it's a little bit different than the rest of our portfolio, the type of units, type of sizes, type of finishes. So it's something that I'm proud of, at least, to say. And hoping we could do more corners and more deals like that.
Absolutely. Corner is something that is prized possession in pretty much anywhere in New York City. With you guys starting in acquisitions, right, and redevelopment of properties, and now you've moved to ground ups as well, right? What are the biggest mental shifts between buying a building that already exists and changing it versus it's a blank slate? This is just pure land. Is there a mental shift for you guys when you're looking at this acquisition and your transition to ground ups?
Yes and no. And I say yes because it's a different type of operation, different type of development. You're dealing with a brand new building, foundations, SOE work, soil tests, things of that sort. But no, because majority of the deals that we have been doing was largely value add. And I don't want to say more complicated, but came with more complications dealing with an existing building, an existing structure. I think sometimes, you're afraid to leap until you actually do it and you realize it's not that bad. And I think when you look at a ground development, you look at all the intrinsicies of doing a ground development and getting approvals. But then when you actually go through the motions, you realize it's not that much different than what we're dealing with. If anything, a little bit easier, because once you do get your approvals, putting up a building, you're dealing with the foundation. If you have the right people helping you do that, you're not dealing with the stacking plan of the pipes or the heating or dealing with certain windows or air and light. It's pretty efficient once you build a building, but there's a lot of more intrinsities that take to it. So it's something that we're getting a lot more involved with when it comes to just the construction and operation, more so than just the construction management department that we have.
If these ground up deals go well, do you see yourself shifting your focus entirely on ground up, or will you stick to what you guys started with in redeveloping existing assets?
Well, you asked the wrong question. You should have asked when these developments go out well, not if these developments go well. But when they do go well, I think that it will definitely be a case study like we've done on other deals, including 350 48th, to kind of prove some either theory or way to build on some sort of business strategy. I don't say that we're shifting away. I think that we're opportunistic, but I think given the legal climate for landlords in New York City over the past couple of years, I think we are forced to shift into other sides of the value add space on multifamily, whether it be condos or ground up rentals or single family townhomes. I think our bread and butter is always going to be multifamily. We understand it, we live it, we breathe it. It's where we come from. And I think that it's just shifting with the times and seeing where the opportunity is. And it used to be buying buildings that were occupied and vacating and creating value that way. Since then, since 2019, have abolished those opportunities. So now we have to shift our focus and our company's vision and strategy into other ways. We're still looking at vacant, opportunistic reposition buildings, but they're very difficult. They come with a lot of red tape. And sometimes we're also finding dealing with the development deals with a lot of less unknowns, i.e., tenants and things of that sort. So I think it's just another strategy we're adding to our repertoire, and we're looking to just grow in other ways, whether it be multifamily or who knows, God willing, we'll be in a lot of other asset classes.
In expanding your field of opportunity, are you looking at other geographic regions, or is it primarily New York City for you, where you feel comfortable and that's what you want to focus on?
Well, New York will always be home and always be our bread and butter. But as you know, we own a few properties in Texas already, and we're looking to do more in DFW in the Dallas market, more than Houston. Dallas is probably, it may be the strongest rental market in the entire country today. Florida has been something of interest as well for some time, but Florida has other challenges like insurance and just people, I think, that are overpaying. Ideally, we're going to continue thriving in New York, but we definitely looking to plant a bigger flag in Texas and hopefully Florida soon one day. And I'm going to hang out and see you boys more often.
So one thing you mentioned is your growth, right? And in order to grow, you need people. And your team has grown considerably from the times that you guys had your office in Brooklyn to now that you guys are in the city, and the importance of adding the right people. So my question would be twofold. One is, as you guys grow, have you guys defined responsibilities between each other as owners? And how would you say adding more people to your company expedited that growth for you?
Yeah, I think we can kind of, like you said earlier, kind of taking on our roles. I oversee, Jeff and I do a lot of similar things, but there's an overlap, but we do a lot of different things as well. My main focus is dealing with the deal flow, the operations, the guys, kind of putting the pieces together and letting things flow, as seamlessly as possible, kind of being the conduit between everything. Helping with the business plan and kind of putting the pieces together. Jeff handles a lot of the investor relations, the financing, the debt, the equity placement. My brother hands-on right at this point is the full-on construction, design, helps with the lease up, post-construction. And then the guys we have now, they take a lot of the load off us in terms of like sourcing and underwriting. So that initially was just us. We were doing everything, literally A to Z. But now we have 5 guys pounding phones where our deal flow is increased significantly. Our phone rings because people know us, but we believe in being proactive, and through having an office full of guys, I think we're seeing hundreds of deals a week. So just from that, it's I don't know, Jeff, you want to add? Did I miss anything? But that's pretty much how I see things.
Yeah, I mean, I could tell you that now we have a different approach in terms of how we structure our company and how we structure the different departments, and it's an ever growing division of business development. And we say this very often, where it comes off almost repetitive, but it's really serious. Like, let's work smart, not hard, and let's find ways to be the most mindful with our time. George, has this saying, least amount of input and the most amount of output. So, being able to create some sort of machine here is the next steps and venture of the company. And be able to create really just an assembly line, so that when we have an operation, it goes through its own process, just like the major institution developers of the world. And I think we're getting there, and I think that the way this company operates is growing. And I think as you take on more responsibilities, more deals, more assets in the management, each department has to go through its own challenges and own growing pains. But it's exciting, it's fun, and that's what it is being a principal and an entrepreneur. You got to deal with it every day and deal with every department and help where you need to. And it's like a family here, and that's how we take this role, and we take this leadership of this company as a family.
What would you say is the biggest hurdle for you as a company right now? Is it not seeing enough good deals? Is it not being able to raise the equity for the deals that you're seeing? If you were to kind of pick one bottleneck that stops you from doing 2 or 3x, like what would that bottleneck be?
It's definitely equity. Equity is the cure all for things. We're able to raise. There's ever been a deal where we were not able to close. Having strong equity partners behind you with different return thresholds can be a game changer. Our stuff is typically, because it's heavy value add, the returns typically are much higher. But there's a lot of capital out there, right, for say safer deals or cash flowing deals. Having a different sort of strategy in terms of an equity partner would be a game changer. So there are deals that we see that it could be a prime location, but it could be a 15 or 16 or 17 IRR. But given timing, it may end up being much better, call it like a West Village or a Soho deal. But we end up not pulling triggers because it's just like, if it doesn't go well, it can go the other way. But, having a partner that has sort of patient sort of capital would probably be the biggest game changer for us.
Jeff, would you agree that equity is the bottleneck for you as well in your mindset?
Yeah, I mean, I would love to see more vacant buildings in New York. I mean, we could do as many of them as we can. But I agree with you. I think, having the right patient or the right ability to pair the opportunities we see with the right capital. It's not that we're looking for the right capital source, it's that we want to be able to have multiple sources to be able to pair the opportunities with that source's needs. So for example, there's maybe groups that want to do a lot of value add, heavy value add very much on there early on in the process. And some groups like that, higher IRR, less cash flow in the beginning, a little bit riskier, but more juice. Some groups want to buy turnkey and they don't mind building from a 7 yield to a 10 yield over 8 years, but they know that there's steady cash flow and it's a prime location. I think, part of our business is putting the pieces together. And what I'd like to try to do more of is not necessarily finding not necessarily new equity sources, but finding the pieces to put together the opportunities that are presented us, the angles and the opportunities we see in those deals, along with connecting them with the right equity partners. So I think that would be a way to 2 or 3 time fold our company.
And to get these right equity partners, is it more about having a better, like more deals in your past, a better record, or is it just getting the right person in a room so you can sell them? When it comes to equity, is it about getting the right person in a room, or are you guys still not in a position as a company to be able to speak to those people?
Firstly,
No,
shout out this. Sorry.
I think we are. I think we are. Every deal, the deals we have speak for themselves. They've been, for the most part, been, home runs. Obviously hit some doubles sometimes and triples, but I think that for the most part, we're getting higher returns. It's not a matter of the deals we're doing. It's about just aligning at the right time. And the one thing I realized is market and economy conditions change, equity requirements change. So it's kind of a moving target. That's the experience of it. You have a conversation with one group and you speak to them 2-3 months later, and it's a different requirement. And it's just like a moving target. So it's ever evolving. So it's about, I think a lot has to do with timing and just finding the right. We found the right equity group, but they're tapped out at the time being. So it's just, I think a lot of it's timing, honestly. We found a lot of these guys, but we just haven't, I guess, we haven't solidified, it's called the right marriage between them and the deal. I think it'll happen, but I think that's just been probably the biggest reason.
So it's very interesting. The word that you used was marriage, right? Because it's a two-way street. And I know, through doing deals with you guys and raising money and all these things, it's one thing to need the equity to make the deal work, but it's also having the right expectations as an equity partner for the type of deal you're getting into. What are some of the things that you guys look for in a partner, whether it's an equity partner, whether it's a lender, whether it's a JV that you're doing with somebody, because that's something that you guys started doing as well, right? A JV with landlords into redeveloping or building ground up. What is let's just say, top 3 things that you look for in a partner?
I think it's a good instinct with a lot of these things. Based on your initial conversation, I think you'll know if you can see eye to eye on things. When you discuss vision and you discuss understanding of things, like if there's an understanding of things, if people understand what you're doing and they see the value, that's step 1. Step 2 would probably be who's contributing what, in terms of like a partnership with JD. It has to be like it's a marriage. Like you have to complement each other to some extent. Everybody brings something to the table in a joint venture. So understanding who does what and what those roles are. And in terms of just like, I would say, the biggest thing is just feeling. We've turned away investors who wanted, say, discounts on promotes and things like that. Like I don't, this is not a flea market. We're not here to give discounts on our work. People got to understand that there's a certain value and there's a time and things that go into what we do here, and kind of walking away from the wrong situation can be maybe the best deal, but kind of situation. I don't know if Jeff has any dab. Those are the 3 things that come to mind.
What about you?
I think transparency, and sometimes that comes through a gut feeling. I think wherewithal and knowledge. We we were working on a joint venture ground up in Manhattan. It was a $15 million purchase. And we really didn't feel like the developer who had it on the contract knew what he was doing. And our thought process was, let's figure out a way to, partner something with him and kind of like really take hold of the operation, because that's more of our forte. We didn't feel like he was adding a lot of value, nor did he have the experience for it. Fast forward a year later, someone brought us an opportunity where they had a small angle, but we knew of the project. It was marketed. We're doing the project together. It's a $40 million project in downtown Manhattan for a condo conversion, and they're bringing real angles to the table. They're bringing different ideas, and it's a great partnership. So I think with transparency and how they relay things, which sometimes relates to a gut feeling through the discussions and interactions, along with having some wherewithal and knowledge and things to bring to the table, like George said, I think those two are big important parts, at least when you start that relationship, as you see that grows and then see what trust level you can develop from there.
Yeah, absolutely. One thing that I keep hearing in the conversation with you guys right now is the word trust. New York City being such a tight-knit circle of real estate professionals, and reputation is very important. It's something that we see from a distance. Anybody we speak to, that trust factor towards King's Capital. If you guys say something, that's what it is. You're not trying to fool anybody. You're not trying to backstab anybody. And that's very important. And I guess that the trust and the transparency that you look for in the partners is justified because that's what you bring to the table. In terms of challenges when it comes to JVs, right? Because all the deals prior, you guys had 100% control. How much harder is it to get into a JV where you have to give up that control? Or is it hard for you?
It's hard. I mean, it's hard in the sense that you have to know that you're not the driver. You have a co-pilot as well, and it goes back to just synergies. If you're on the same page and you share the same vision, it's okay. I mean, everything we do, we're not relinquishing control, we're sharing control. But when you work with like-minded people, and have the same vision as you, that usually goes well. So we have 3 joint ventures officially signed in all condos right now that we're doing. I'm hopefully doing a 4th. Every one of those, there's a common understanding on both sides, and who's doing what, and roles are identified, and it's seamless, So, in a way, it works well because you kind of don't have to do it all in some of these situations, and there's a complement, but just it has to be the right situation.
Joint effort.
In terms of opportunity, I see like you mentioned, you have 4 JVs that you're working on right now. 3 of them are signed up. You're looking to sign up the 4th one. It seems like you're doing more and more of JVs. Is it because it became more challenging to underwrite deals without doing a joint venture, or why the shift to doing more of these types of deals?
Being creative, like you said. So, like the 2 of the joint ventures we're doing, they're with landowners right now. It's essentially you coming in, and it's a win-win for everybody, because you have these property owners that want, call it above market for what their property's worth today. They contribute the land. We go in and put up the capital and do the construction, and kind of formulate values on who's doing what and what the land is worth. And they get the upside with us, and we get to get into properties that we normally wouldn't have had. And the one downtown that we mentioned, it's either one of us probably could have bought the property on our own, but there was an opportunity for both of us to get involved and kind of partake in the upside, with also sharing roles. But it's definitely a way to get involved with deals I think that you wouldn't have had. And we want to do as many deals as possible, and if it means doing joint ventures, and not taking 100% of the upside, like, we're okay with that.
Understood. So, for example, one thing that Jeff mentioned before earlier in our conversations is the rent laws of 2019, and even stringier laws came in 2022, 2023. That limits some of the things that you used to be able to do, or completely eliminate what you guys were able to do. In 2025, what do you think is the opportunity for you? What's the number one thing that you guys going after? Is it JV opportunities? Is it ground up opportunities? Is it the vacant buildings, or is it something completely different?
A combination of everything. I think there's to Jeff's point, there's a limit of how many vacant buildings you can get. With the new rent laws and with the new tax benefits that pass with the 467M, I think the office to resi is going to be a very good sort of strategy moving forward. These Class B and C office buildings, throughout the city, they need to be repurposed, and I think there's an opportunity now with the tax incentives to get into that. joint ventures are top of our list right now because it's a way to get involved. So it's kind of weird. It's a low barrier but a high barrier. It's hard to get those deals, but you're creating so much value where it's a low barrier. You know, you're getting owners some of that upside they can't create. Our specialty is the repositioning and creating that value. If someone can see that, you know, that's definitely a big priority for us. Our goal is to do more rentals. It's just been challenging right now. Like we have, I'll call it three condo deals on the contract, and with two more kind of in the pipeline, you know, with one might be signed today. So, you know, it's just been challenging to find good rental product. That would be I think our dream and vision would be to find a balance of both rental and condos, because you have different capital events at different times, depreciation benefits with the rentals, and a kind of a well-balanced sort of deal flow.
Yeah, absolutely. And Jeff, without, getting too political, right? But unfortunately, real estate can't be separated completely with politics, right? So with what's happening politically, with the stock market going down, rates going down, people being laid off here, like, how do you guys underwrite to take in all these different risk factors? Because all these different risk factors eventually have to show up in the underwriting, whether it's in anticipation of the condo sellout, what you're expected, or the rents that you're expecting to get, or how much you're looking to finance and get the rates at, that debt for. How are you guys able to juggle so many different moving variations, especially in a turbulent time like right now, where so many different things are changing?
Those that direct to me. So it's not easy. You sometimes have to make assumptions, and the only answer I'll give you is being conservative on your assumptions. When it comes to the matter of interest rates, I think we use today's interest rates or somewhere around there to be conservative of where we are a year from now. And if things change for the better, that's great. If they don't change for the better, at least we anticipated that. I think when it comes to rental properties in New York, it's all about timing. So you never be able to time it correctly, but at least be able to have a very plausible assumption and something that could be within a very near amount of what you're expecting things like rates and cap rates to be. In terms of the political side, I mean, look, there's a lot of stir up in the stock market now. The market's continuously down. And, one thing that's not changing is people need to live, and there's a shortage of housing in certain metropolitan markets. You would think that because of the interest rate being high, that it would actually affect people buying condos in certain pockets of, let's say, Brooklyn. And again, everything has specifics. But in Brooklyn, the $1 to $2 million condos are actually going very fast. They're being sold, usually all cash type of deals. And I think these buyers came to reality and just said, look, we understand our rate's 6.2%. We're going to sit here waiting another 3 years. We're not going to buy anything. And we have a family to start. We need to get to a certain educational district for schools. And we're growing out of our 1 bedroom or 2 bedroom. So whatever the situation is, I think that right now a lot of people from New York, which is its own market and its own type of world in my eyes, I think just people came to reality and, whatever today's rates are is the new norm. But I think going forward in terms of projections and underwriting and how we're assessing that in the future for evaluation and on an economical level, I think it's really just being conservative today's numbers, not anticipating things that may go against you, like cap rate compression, and being mindful that just what the politics and what government's doing could definitely affect things. How that will affect on more of a macro level or on a overall level, it's yet to be it's yet to be remained unseen. But I think what we do is very specific to our target is, whether it's a target renter, the target condo buyer, or even the target building buyer. You have to think about how they're going to look at it and what the challenges they're going to deal with. So a condo buyer is going to be dealing with challenges of rates. So are they, necessarily buying these $6 or $7 million condos? There's not a lot of people buying them $6 or $7 million cash, but 1 to 2 million they are. And then when you get above 10 million, maybe you're dealing with a different type of buyer pool. On the rental side, you know, you have the job reports, you have unemployment, you have income, you have AMIs, but there's a limit of housing. So when we create this affordable type of shared bedroom type where the rents are, feasible under $5,000 for a 2 bedroom with all the type of amenities, washer, dryer, dishwasher, this becomes more of an option that people have to gear towards and getting their own place. So it's trying to get a little bit of the psyches of who the customer is and what they're thinking. When we're selling these buildings, we realize right now that no one's buying these at a 5 or 5.25 cap, and we may have to use closer to a mid or high 5 cap, or even close to a 6 cap for our exit, because of where the interest rates are. And that may change in a few years, but if we use a 5.75 exit cap today for 4 years from now, and the rates go lower, well, we'll look like a hero. But if they don't go lower and that's where the market is, then you at least did what you said or anticipated. There's no real answer, but I think it's just being conservative and understanding who your customer is.
George, I remember being in your office about 6, 7 years ago. Right next to your desk, you had a vision board of things you want to accomplish in your personal life, your family life, and there was a picture of what you want King's Capital to look like in the future. And I distinctly remember it was a big, big office, open floor plan, and a lot of people picking up the phone and dialing. What does King's Capital look like for you on your vision board now? I think it must have been 6, 7 years. What does it look like now for you? What's your vision for the future?
Good question. It's funny. We kind of have that layout today in our office the way it is. We have our office, our offices are in the front and back, and then kind of the pit in the middle with all the guys. The color's a little different, but the layout is generally the same. But in that picture, it's funny. I just took that vision board home. It was like, I hadn't set it up here properly. And it looks like it's like a nice brick building, like in Dumbo. And, maybe we get there one day. But, so the goal, I guess, the goal for us right now is to scale and also help empower the guys we have in the company. So $5.5 million deal was our biggest deal in 21, and now 5.5 is small for us. The goal is to scale up, do larger deals, but I have a dream and a vision where the guys that are in our office, and you guys speak to them, and we're teaching them how to see things through our eyes and kind of be an extension of us, and we send them out for tours. The goal is to continue to do these smaller deals, but kind of empower the guys in the office to kind of be the point guard on a lot of these deals where they can, lead point on the construction, the design, the overseeing our people, but where it's almost like a JV division of King's Capital, where I'm able to oversee the guys that are overseeing these smaller deals. And that's kind of like my dream. Instead of saying no to these smaller deals, I just have somebody that's in my office I know and trust that can do it for me.
And Jeff, what is your vision?
To change the New York skyline.
That's my dream. These guys taking this guy copies everything.
No, I said it first.
This guy copies everything.
I said it first.
So what story building is that? Like, what does it take for you in your head to change the skyline? Are we talking about the tallest building in Manhattan? What are you envisioning? What does it look like?
Maybe the tallest on that block would be good.
But the prettiest at least.
My dream.
Preferably a corner. What am I, a dream catcher?
First, this guy in his corners. I was talking somebody. I was dating a girl like 10 years ago, and it's funny. It was like a deep question. She goes, "What is your dream?" And it's funny. And we were actually. I remember this like it was yesterday. I was driving on the BQE, and we were just talking. We were in a deep conversation, and I didn't tie my dream to money. It wasn't like I want to have at the time. $1 million a year was a lot of money. Now it's not, right? It was never tied to money. Putting up a skyscraper in Manhattan that you can oversee. I remember looking at the BQ and I was thinking changing the skyline, and changing the skyline is something that's in perpetuity. It's like when you watch a movie and, they kind of have the opening credits and it's showing New York, where hopefully, I have a family and the legacy, and my grandkid could say my grandfather put up that building, and it's just in perpetuity. It's just kind of like, so I guess they're left behind. What we do here, the money will come and go, but putting up a building that somebody can recognize forever, I think is something that's very much on my mind as a dream.
You read it properly, the story I told you, George.
I just get around with it.
One thing that comes off right away from you guys, and we've known you guys for years and speaking to you, and even now, is that passion and that drive, putting up a skyline, right? What would you, and then this is a question to each one of you, and what would you credit that passion and that drive to achieve great things as opposed to just being happy with a 9 to 5, getting by? Where do you get that drive? Can you credit your immigrant roots? Can you credit your upbringing, your family? Well, I guess we'll start with Jeff. What is driving your passion?
The ability to do it. You don't know what you can do. Like I was saying before, you don't know, what's scared until you jump. When George called me on July 3rd, 2020, and he was like, this property in Manhattan, I was like, us, Manhattan? And you would think like, wow, it's like the prize. But then you realize what you could do, and you're like, it's just another building. I think it's just an exemplifying way of, I don't want to say success, but what you've built, and no pun intended, and what you're able to create. Originally we were working on, 3,000 square feet, 3-unit buildings. As a recent are wrapping up a 40,000 square foot, 40-unit building. So I think it's just a testament of what you're able to do. And it's like that runner who keeps pushing himself more and more, that wants to see how fast he can go and how fast he can go and can he break it. And what I end up realizing, like they have with, I think it's the minute mile man, I believe, is that once you actually break it, you realize that it wasn't that difficult to begin with, but it was all in your mind. So I don't know if it's a way of proving, ourselves, but it's more about like we could do this. And just to add one last thing to that is it's the same brain damage to some degree. Not changing a skyline, dealing with a $5 million project and a $15 million project, a couple of more kitchens, a couple of more zeros, a couple of more dollars. But end of the day, you're dealing with the same level of work, the same type of property, the same closing with a mortgage, the same documents. It's just a couple more zeros and a couple more apartments or so. So for us, it's about scaling and being able to do more and bigger and use our efforts more wisely for our time. But it's also about see what we could actually deliver, what we could do. And right now it's been an exciting ride, and I think there's a lot more that we could do.
Interesting. And George?
Kind of a combination. Definitely, it starts, I think, from immigrant roots. I grew up in a house. Both my parents are immigrants, and families came here poor, so I got to see hard work from a young age. My dad is 75 and still working 6 days a week. 11-hour days. It's kind of like in our culture. So hard work never scared me. It's always something that I felt was a part of life. Not that I want to work hard and not smart, but putting in that effort was second nature to me from a kid. And I always had this sort of competitive sort of fire in me. I don't know what it was from sports. I grew up playing basketball. I just had a fire. I always wanted to be great, and being average scares the heck out of me, so it's I want to live my life feeling abundantly, and just I have this fire that just helps me keep going, like, it's one of those things where just being average is it's not an option for me.
It sounds like the guy that he has a photo in his room, in his office of Kobe Bryant, Mamba, Black Mamba. So sounds like
Yeah.
exactly like him.
But for knowing George for as many years as I do know him, I mean, that's a very good person to emulate, because everything that Kobe instills in his mentality, George has most of it, if not all of it, when he comes to his own personal life, whether it's personal, business, friendships, or whatever the case may be. Going along with that train of thought, right? And I guess when you were in Miami 2 weeks ago and you said this kind of question, and we decided to kind of throw it in there to both Jeff and George, is if you could sit down with your younger self, at the start of the journey, what would you say to them right now? One advice or one thing that you could tell them about the future where you are now.
Let's pick a point in the past. Let's say a 15-year-old Jeff and a 15-year-old George. What
Yeah,
kind of
that's a
advice?
good
What
age.
advice do you give them
I have two pieces of advice if
about
it's okay.
everything, not
So,
just business?
well, yeah, it's hard to give about everything, but the first
Pick a
piece
great
of
partner.
advice.
What are you going to tell them?
I'm sorry, I didn't catch that, George.
I think you kind of cut out on us. Would say again?
No, I thought George was saying something. The first piece of advice I would give is save as much as you could save. Just keep saving, because one day you're gonna have to invest it. And I think the other piece is to stay focused and to have a bigger picture vision. And just like anything in life, business and in life, relationships, work, whatever it is, it's always about the long term. And if you have a long term vision and you realize that the short term challenges are not really to define your success or what you're trying to achieve, I think long term you'll find that piece of what you were looking to do. But again, you have to have a longer term understanding that things in life, business, relationships, making money, knowledge, growing a company takes time, takes efforts. One time at one point in your life, you're gonna look back and say, wow, this is what we were able to build. So I think just taking time to look for the long term and save as much as you can is the real two pieces of advice I would give my 15-year-old self.
That's very good. And George?
A few things, different, kind of a different angle. First thing I would say is take risks, especially at a young age. I think a lot of what we're doing today, I had visions of doing it years ago, and we took a conservative approach to a lot of the things. And maybe for one reason or another, I can't avoid it, but we're here today, and I wish I did a lot of things earlier. So I would tell that that young boy to take some risks and don't be scared. Follow your gut. Do it cautiously, obviously, but don't be scared to take risks. I would also tell him that life happens for you, not to you, and not to get hung up on the negative, because sometimes the universe redirects you and you just don't know it. And as we discussed a few weeks ago, I think there's a chain in life how everything's connected. And you got to trust that what's for you won't miss you, and don't be hard on yourself, because the bad thing about driven people, they hard on themselves. I think having a little self-compassion can go a long way. Keeping your head on correct. And the last thing I would say is work harder on yourself than you do on your business, because once you adjust and you become something great, everything else follows. You just have to work on yourself. And that's something I've been working hard on, and something I wish I did at a much younger age. But put in that time and focus on creating better habits, I would say.
And the fifth, I want to go the other way now. If that 15-year-old boy, if he goes to the future and he sees you, is he happy with who he sees? Is he proud of who he has become?
I think so.
Yes.
Yeah, I think so.
All your dreams, aspirations achieved, or is there something that
You're making me visualize this guy. I'm getting emotional right now. This 15-year-old boy talking to me right now. You put me on the spot.
Well, that's the whole point, right? Like, this is what we want. We want emotion. We want to see exactly who you are, because at the end of the day, it's one thing to be deal makers, making money, growing, scaling, the typical things. At the end of the day, behind all of that, there's humans, right? Human feelings, human emotions, and who we are as people. Farouk asked a great question. At the end of the day, it's like the 15-year-old looking at George where he is now, or Jeffrey Znaty, the 15-year-old, which I would have loved to see actually Jeff at 15. Knowing your mind today, I would have just curious to see what your mind was in adolescence as a teenager. But me being sidetracked with that is everything that your 15-year-old self wanted in life. What would he say? Okay, George, this is what I loved. Great job. And this is what, maybe I would have wanted you to focus more on. And the same thing for Jeff.
I think he would have been proud of what I've accomplished on the business level. I feel like I am proud, humbled, but proud at the same time. I think we built something great. At the same time, I think that he would tell me to have a better work-life balance and spend more time on myself and relationships, friends, family. I wish, he probably would have said, you need to just find time and enjoy more and enjoy your successes. And he probably, the one disappointment is that I'm not married with a family. And that's one thing, from a kid that I've always wanted. I'm a family guy, and the goal is to have, a wife and kids. So that's the one thing he'd probably smack me on the side of the head and, tell me to get cracking. But other than that, I would say mostly good things.
That's something that's very admirable, and maybe once this podcast is out, we'll get you some more wife inquiries and speed up that process a little bit. And Jeff, what about you?
I think it's very similar. I think, luckily I'm hopefully getting married this year, but I think just focusing also on personal things, not just money. Money comes and goes. So focus on personal growth, mindset, which credit to my partner for giving me the right mindset sometimes. So just starting the day with the right mindset, or going into a certain situation with the right mindset, or coming out of a situation with the right way to control things like emotions, and just learning how to get a hold of being your own master of your own domain. I think the other part is, be focused on what makes you happy, which end of the day, money's great, but I don't think it makes anybody happy. It's like George said, building a family. And I know Farkad has a family and kids, and has, Prince William, and has, also a daughter. And so it's just beautiful. And I think that's the prize and the day, is to have a legacy and have someone take your name. And, hopefully we build this not for ourselves, but for family one day. And, focusing more and making that more a priority early on in life. But I think George said it right before: life happens for you, not to you, and everything falls into place at the right time. So you got to look back and thankful where you are today, and try to strive for better for tomorrow.
Yeah, absolutely. And it's interesting, as you guys are saying this, I'm actually imagining your 15-year-old selves being in the room having a conversation with you. I imagine the younger George having a conversation with him and getting very emotional. But for some reason, Jeff, when I imagine a 15-year-old you being in the same room with you, I just imagine you guys arguing. I don't know why. It's either you're giving him shit or he's giving you shit. Something will be off there. I don't know. Maybe it's just the way I'm imagining it's wrong.
Said I'm pretty tough on myself, so I don't know if it's because I'm tough on myself, but
Well, there you go.
I hope.
Jeff would be negotiating with his 15-year-old self 100%.
And the other way too, the 15-year-old be like, Jeff, hit the gym once in a while. What's wrong with you? This is what I've become. Like, really? 20 years later, this is me? Come on, you do better. I just imagine that kind of dynamic. I'm sorry.
Hopefully.
But guys, it was nothing but a pleasure having a conversation with you. We covered a lot of topics. I know today's a working day. You guys are busy. We are busy. Thank you so much for coming. I know I see only good things for you. Our business relationship is going to continue to evolve. Our personal relationship is going to continue to evolve. And I wish you guys the best. And I know we have a lot of things in store, for you and for us, as a whole.
Feelings mutual.
It's mutual. We love you. We miss you. Thank you for having us.
Come visit us.
Thank you for being on, guys. Come with us. Yeah, absolutely. Thank you guys so much. I know, like Farouk mentioned, it's a working day and you guys took out the time for us. And hopefully the world will see different side of Kings and only good things.
Looking forward. Thanks for your time, guys. Have a great day. Thank you.